Hey guys, so I hope you're ready because this is probably the one topic that most people are like, I don't get IDR. What's IDR? Income driven repayment plans. But you need to get it because some good stuff is happening with IDR and you don't want to miss out. All right. So previously I talked about loan discharges, and one of the ways you can get your loans discharged is through IDR. What's IDR? All right. So 6 months after you graduate or you stop going to school, you have to start repaying your loans. There's your standard repayment, the graduated payment plan too. Income-driven repayment plans are based on your income. So I've had friends who, they're working as a prosecutor or a federal defender. They're not making a lot of money. And under the standard payment plan, it would be almost 50% of their monthly take home for their student loans. Under the income-driven repayment plan, you get to pay less. So the income-driven repayment plan has this thing. There's about 5 plans, and depending on the plan, your loans will be discharged after 20 to 25 years. So you're like, say what? I'm gonna back it up. So with the income-driven repayment plan, your monthly payment is based on a percentage of your income. The other thing is with these IDR plans, IDR income-driven repayment plans, after being in repayment for 20 to 25 years, depending on which plan you choose, your remaining balance is discharged. So the IDR plans have been around for over 20 years, and 4.4 million borrowers have been in repayment for over 20 years. And I think it's like less than 200 have gotten their loans discharged. Because of this, there's been major reform to IDR. So what do you need to know? Some good news. Due to the federal forbearance pause, so March 2020, anybody that had federal student loans went into forbearance. Not only did they not charge any interest while we're in forbearance, but also the months of federal forbearance counts towards your 20 to 25 years of repayment. What does that mean? March 20 to 21, 21 to 22, 22 to 23. So it's March now. Oh my gosh, it's March now. So we have about 3 years of federal forbearance that will be counted towards your income-driven repayment. Massive. Okay. The other thing that's going to happen, and this is something that we'll just go into it right now. It's called the one-time payment adjustment. People are like, but I don't qualify for up to $20,000. The up to $20,000 loan forgiveness that Biden has proposed, that is currently before the Supreme Court, is separate, distinct, has no impact on your IDR loan discharge or months towards repayment. So whatever happens with Biden's student loan forgiveness in the Supreme Court has no impact on the IDR reforms that are happening. Okay? Unlike Biden's up to $20,000 in loan cancellation, there are no, even though IDR says income-driven repayment plans, there are several repayment plans. There's no restriction for this one-time payment adjustment. I'm confused, Rhonda. I don't understand. All right, so why are we having the one-time payment adjustment? Here's the deal. You guys know that loan servicers haven't always been the most transparent when it comes to programs that would help benefit you to pay off your loans faster, to get out of debt. So here's the thing when it comes to the IDR programs. One of the things with IDR is that if you are in forbearance, and you're going to say, Rhonda, hold on. If you're in forbearance, your months in forbearance do not count towards payment to your loan discharge. So data and studies have shown that loan servicers were doing what they call forbearance steering. Instead of having people stay in the income-driven repayment plan, they were putting them in forbearance, because guess what? If you're in forbearance, your time doesn't count towards those 20 to 25 years. And so most of the people who have been, quite a few that have been paying for at least 20 years, had some type of forbearance, and then they started the repayment plan again, and then the loan service was like, oh, no, it's cheaper if you do forbearance. Where actually, for the income-driven repayment plans, if your income is such that a lot of people have had things where their monthly payment under IDR is $20, $15, or $0. But loan servicer was like, oh no, it's going to be so expensive. I spoke to one person where they said they were eligible for public service loan forgiveness, and their loan servicer never told them. They had been repaying on their loan since 1995, and their loan servicer never told them. So the point of the IDR one-time payment adjustment is to acknowledge the fact that loan servicers were doing forbearance steering so that people could not pay off their loans faster and get towards discharge. So what's going to happen? What does that mean? If you are in public service loan forgiveness, which requires that you be in repayment for 10 years, and then at a qualifying employer, like city, state, local, federal government, or a qualifying nonprofit, then your loans should have been discharged. People who have been in public service loan forgiveness for 10 years, and people who have been in IDR and in repayment for over 20 years will see an automatic forgiveness or discharge under this one-time payment adjustment. What did I say? Yes. If you have been in repayment for your federal student loans for over 20 years, an adjustment is going to happen to your account sometime around spring, and you will see a zero balance. I've already spoken to some public service loan forgiveness borrowers, and some of them have already seen zero balances. What does that mean for everybody else that has not been in repayment for 20 years? Most people are going to see, you're going to see the months that we've been in federal forbearance. That time will be credited towards your months of repayment. And also, anytime that you were in forbearance before the pandemic, you're going to see credits for that. I have an article. It's going to break it down for you. What do you need to do? You do nothing. It's going to happen automatically. They are starting off with people who have been in the public service loan forgiveness program first. So those people, some of them have already started seeing the adjustment to their account. Then they're going to move over to borrowers who have been in repayment for over 20 years. Okay? And then all other borrowers will see this happen to their account in the summertime. This is why I was saying whether or not you qualify for the up to $20,000 may not matter, because quite a few people are still, if the Supreme Court, finds in favor of Biden's student loan forgiveness program, many people are still going to have remaining balances. With this one-time adjustment, a lot of people, particularly the 4.4 million borrowers who have been in repayment for over 20 years, are going to see zero balances. That, like I said, this is a game changer to be student debt free. For other people, you're going to be closer to the goal of getting your loans discharged. Now, people are like, wait, what? So it's eligible for all borrowers who have federal student loans. Here's a caveat though. If you have commercially held FFEL loans, FFEL, or commercially held Perkins loans, you need to do something. You need to consolidate those loans into federal direct loan consolidation by May 1st so that you can take advantage of this one-time payment adjustment. Okay? Again, if you have commercially held FFEL, FFEL, or Perkins loans, you need to consolidate by May 1st to take advantage of the one-time payment adjustment. All right. The other thing, borrowers who are in default, you need to use the Fresh Start program to get in good standing so that you can be able to take advantage. If you're not in default, if you don't have commercially held loans, you need to do nothing. It will happen automatically. How will I know? Go to studentaid.gov and check your account. That's how you know. But understand the timeline. Right now, they're starting off with public service loan forgiveness and people who have been in repayment for 20 years or more. They are the priority. They'll be happening and seeing these changes around about spring. In the summer, all other borrowers will see the adjustments to their account. All right. There is another caveat for people who did joint consolidation of their loans. Ed has not issued guidance yet of how this is going to impact you. Like I said, I have an article that I have out for this. So what you need to do is check that website, because right now they're still working out what they're going to do and what it looks like for borrowers who did joint loan consolidation with their spouses. This is not taxable, the debt relief, due to the American Rescue Plan Act. So it's not taxable on the federal level. Some states may tax it locally. Anything else? Check out the explainer. I have an explainer just on the one-time payment adjustment for IDR, and I also have one for IDR. So hopefully this answers your questions, but also go to the explainer. I have hyperlinks. There's like what I need to do if I'm a default borrower. What do I need to do if I have commercially held loans? It's there. There are resources in there too. Please avail yourself of those resources. Thanks again.